Okay, awesome. So thank you very much, Bitso, for this amazing conference and putting together this amazing panel that I have the honor to moderate today. Let's get to it. So we have very good conversation. So let me introduce you first to Rachel. He's an engineer leading at Lightspark, where she helps build infrastructure for instant, low-cost Bitcoin and Lightning payments. She focuses on scaling the money grid to enable banks, wallets, and businesses to move value globally using Bitcoin and stablecoins. Then we have Jamal. He's head of payments at Polygon Labs with nearly a decade in crypto payments. He helped launch the first crypto debit cards at BitPay, led initiatives at Square and Wire, and was part of Bridge, the stablecoin startup later acquired by Stripe. We have Alex also. He's head of payments and stablecoins at Aptos Labs, driving global adoption of payments and stablecoins. He previously worked at the Solana Foundation and Wired and holds advanced degrees in blockchain technologies from the University of Nicosia and MIT. And finally, we have John here, who is CEO and founder of BankSocial, building decentralized finance solution for credit unions and banks. He's a technologist, author of the best-selling Quantularity, and a frequent global speaker, included at the World Economic Forum at Davos. So thank you very much, and let's get to it. So this is a general question, right? From each of your perspective, how are stablecoins and blockchain currently enable financial inclusion or businesses expansion? Could you share a concrete example from your company's work? Let's start with John. Yeah.
All right, perfect. Yep, so I have a very specific example. I was actually in Bolivia about a month and a half back, and we embedded the first self-custody digital asset wallet into financial institutions in the United States about 8 months ago. And I have one of the banking apps. I was at the airport, I was at the duty-free shop, and I was able to, without using credit cards, so in Bolivia, not allowed to use dollars, so there's a big movement right now for US stablecoins in Bolivia. And I was at the duty-free shop. I was able to, everything was denoted in US tethers, USD tether. I was able to, from my app, transfer dollars into stablecoins and pay within a few seconds. So we're actually seeing the liquidity free up via embedded mechanisms that we're putting into financial institutions across the world. And we're starting to see how these US dollar stablecoins are impacting third world countries, developing countries, Africa, LATAM, really across the world, and in real time, like this example that I'm giving you. And so we see stablecoins and specifically digital dollars. Now that the Genius Act has passed, we're seeing a lot of financial institutions coming on board, providing liquidity. I know that a lot of the prior panelists were talking about the lack of liquidity, and that's really why we've focused on financial institutions, because guess where all the liquidity lives? It lives in the banks and it lives in the financial institutions. And so by pairing the ability to tokenize real-time deposits and then migrate those intrabank to stablecoins, to other chains, cross-chain, we provide a whole different avenue for liquidity and liquidity management.
Awesome. Thank you, John, for that example with Bolivia, what happened. It's very interesting. Alex, please.
Yeah, I think for us, we're really taking a targeted approach, working with sender and receiver countries for cross-border payments and remittance flows. I think these things have existed for a few years, but like as was just mentioned, with the passing of the Genius Act, we're seeing a lot of institutional, traditional finance companies. You'll see some news from Stripe and things along those lines that are either A, looking into launching their own blockchain to kind of control the whole flow of funds, or B, working with someone like an Aptos, scalable infrastructure in order to power these remittance flows.
Great. Jamal, please.
Yeah, I think at Polygon, we think that access to financial services is an inalienable human right. And I think what we've seen is that blockchain technology has truly democratized the access to those financial services. I kind of think of stablecoins as like a gateway drug with blockchains, in the sense that stablecoins bring in a ton of people who are, maybe not familiar with the technology or not familiar with other aspects of like tokenomics and DeFi and all this other crazy stuff. And they use stablecoins because it literally just solves problems for them. And with those problems, they realize this technology is pretty amazing. And then they use it to springboard into, tokenized financial products or DeFi or borrowing and lending or payments with your vendors or whatever it is. But I think stablecoins are creating this kind of like stepping stone to get people into blockchains as a whole, which by nature are going to democratize all this financial services. I think we're starting to see a lot of use cases pop up all over the world. I think the one I'll pick, because we're all picking one use case, the one I'll pick is, I think like Visa and MasterCard are creating a lot more infrastructure now. I think Alex maybe can say a little about this as well, because they're deep in the space too. But Visa and MasterCard are creating new programs that are wildly entirely stablecoin based. And with that, you have the ability to do these like global cards, global programs without the limitations of banking networks, without the limitations of local financial systems. And now you have people who truly see interoperability with their assets at like whatever, the 500 million or 200 million merchants that Visa and MasterCard support. So I think it's just the beginning, but I think we're starting to see more and more financial products that democratize this access. And that's really the true thesis that we're trying to go after.
Yeah, I love that. Rachel, please.
Yeah, so at Lightspark, we're building open payments for the internet built on top of Bitcoin. We have two core focuses right now, Universal Money Address, or UMA, and Spark, both of which enable businesses and users to send payments 24/7 from anywhere to anywhere, without those limitations that currently usually exist. I think one recent example of how this is, actually being used is our recent partnership with SoFi. So now with this partnership, all of SoFi's users have the ability to send international payments instantly, securely, and at a fraction of the cost via UMA, which is really great. And through this really positions SoFi to be one of the first U.S. banks to use blockchain-powered or offer blockchain-powered remittances, which is really a huge milestone, I think.
Great. So 4 different experience, 4 very specific overview of use cases based on financial inclusions, I think that are super interesting, your approach. So if we want to move forward with specific topics, for example, Alex and Jamal, your companies are working on different rails, cross-chain scalability with Polygon, regional stablecoin payment with Aptos. What's the most critical pain point you are solving for underserved users or businesses?
Yeah, so I think for us, it's one of 2 things. On the global remittance flows, historically, these have been dominated by USDT utilization on either Tron or Ethereum, which was, one of the only options a few years ago. What we're seeing, especially in the last 18 months is, with the, not to dunk on Ethereum or Tron, but they've been having some scalability issues, right? So we're starting to see a merge or a migration, rather, over to different layer ones for strictly speed and security cost reasons.
Right, Jamal.
I think that the global current financial system is very fragmented. It's very broken. I think what that means is that costs, delays, and frictions are passed on to the user. Moving money from like one person to one person in the US or even in Mexico is not that bad. But throw in a different financial system, throw in a different country, a different currency, and immediately the process is 10 times more expensive, 5 times more complex, the infrastructure is broken, some people don't even want to use those assets. So I think there's just a massive problem with fragmentation, with broken systems, with systems that don't provide the proper UX that we're used to on other sides of the world, right? On other parts of the world. So I think with us, what we are trying to do is trying to create this kind of unified payments infrastructure that builds that interoperability, that builds the right infrastructure for people to be able to hold assets. They're doing it for a long term, and then they use them. So the word I use a lot is utility. Do people have usefulness for their assets when they're on the blockchain? Right now, I think that they have a little bit of usefulness or utility, but I think it's all of our missions here to just build more and more and more infrastructure, set up more partnerships, create more products, and all of that is designed to lower the frictions for people to be able to do stuff with their digital assets. And if they have lower friction, then they're more likely to keep assets on the blockchain than they are in their bank account, especially in certain geographies where the pain of their local financial system is that bad. So I think the number one mission that we all have is that we want to create this kind of universal system where everyone can get access to these financial services and their equitable access alongside that, and they use that to run their daily life and pay their bills, pay their friends, and save and invest and whatever.
Yeah, I think just to piggyback off that real quick before we go to the next question, utility and what do we do with these stablecoins when we have them in a wallet is the next pain point, right? Especially in the U.S. where regulation up until recently has lagged. You probably some exciting news with Rain today. Closed their Series B. Shout out to Rain if they're in the crowd. I think that their use case, which is taking a Visa or MasterCard against a wallet, spending stablecoins anywhere on Visa rails, is very powerful. And so happy to say that we're going to be launching a card program on Aptos as well, hopefully to get in the hands of users throughout emerging markets, especially in LATAM.
Awesome. That's great. Moving forward, Rachel, when it comes to driving real financial inclusions, what matters more, speed and cost of transactions, regulatory clarity, or user experience and trust? I'd love to hear what do you think about that, to you and Alex as well.
Yeah, absolutely. I think obviously all of these are really important. I think if I had to narrow it down, I'd say probably right now, I think the biggest driver is user experience and trust. And I'll explain why. I think the first thing is that I think transaction speed and cost is a part of user experience. Like, I don't think you can have a good user experience without fast transactions and, a reasonable cost to it. And I think, adoption is driven by two things, and that's necessity and then ease of use. I think we know the necessity is there, like that's the problem that we're trying to solve for. So it's really about making it, accessible for the everyday person. And that's why at Lightspark we're doing things like formatting the UMA addresses in a similar format to email addresses, right? So it feels familiar to people. It's something that they've already used in their everyday life, and so it's easier to adapt in that way. And I think, we'll continue to do that. I think stablecoins do a similar thing for people where it feels a little bit more accessible than traditional, blockchain, Bitcoin, crypto. And then I think adoption and usage is what drive regulators to really create that clarity. So I think they're all tied together. It's not mutually exclusive. And, I think of adoption and usage being the kind of building block there.
Great. Alex, what?
Yeah, I think historically, user experience and trust has reigned supreme out of those, kind of the four options there. However, as things scale and cross-border payments scale up, perfect example, in Africa, the average transaction size of a peer-to-peer transfer is around $6. Currently, that's dominated by USDT and USDC on blockchains that at times have a $2 or $3 gas fee, right? So if we can't solve, that's a 30, 40, 50% fee to that end user. As a blockchain community, if we can't solve and lower that number to compete with traditional banking rails in the US, then we've got a whole other set of problems. So I would say, as we move into the future, it's going to be cost.
Perfect. John, we have been discussing about different approaches, open banking, layer ones, Lightning, cross-chain. Do you see this system converting, or will inclusion be driven by local specialized solutions? How should the ecosystem will work together?
So we see it as something that has to be intuitive. To have to figure out how to swap dollars for stable coins and then send money, it has to work like an Uber button. You're not gonna get adoption. We don't have to guess to think if this is actually what will win. We just have to look back at the days of the early internet to look at how it played out in those times. And so if we're not able to create systems that behave like the existing systems we have, at least on the surface, user experience, I think, being one of the paramount focuses of success, you're not going to be able to drive adoption. You're not going to be able to drive the ease of liquidity migration on chain. Somebody shouldn't have to know that they're using a stablecoin on Polygon to get, just like they don't have to know that they're using ACH or FedNow when they send a payment in the United States, or SPAY here in Mexico, or PIX in Brazil. They don't have to know that. They just know that they want the money to get there in real time. They want it to go on the cheapest rail, and it happens. And so what we see is, that's why we feel like cross-chain collaboration, cross-asset collaboration. We see, we work with banks, we work with financial institutions in the United States. We actually see a future. We're working on use cases right now where you will be able to tokenize your house and pay with your house, fractionally pay with your house at the pump, fractionally pay with your house or with your car. We're actually working on these types of use cases with banks in the United States. And so I think experience is what matters, and putting the buttons and the interoperability, the Uber button there, so that when somebody pushes it, money just shows up and things happen. That's got to be the primary focus of all platforms building right now across the space.
Great. Rachel, what do you think about that?
Yeah, so I think at Lightspark, we believe the future of payments is open, built on a foundation of where anyone can access, improve, and innovate on it. It's not controlled by a single corporation or government, and it's really, like I said, accessible to anyone, anywhere, at any time. I think a lot of the solutions that we see today, I think, even including stablecoins, are still centralized and closed-off systems, and that's why we believe it's really imperative that the underlying network is truly neutral, decentralized, and kind of, opens it up for so that it's not a completely controlled network like we've traditionally seen. So, that's why we're really, firm on Bitcoin and really think that that's the future. And, Bitcoin has had a lot of drawbacks in the past, right? There's a reason it hasn't been traditionally used in this way. I think Lightning was the initial attempt at addressing some of those issues, but even Lightning still has its drawbacks. The channel payment system is very challenging. It doesn't, lend itself well to things like stablecoins. And that's why we designed Spark to really make Bitcoin the most efficient settlement layer while still maintaining all the aspects of Bitcoin that we love, the trustlessness, the permissionless, always on, all of those aspects. So that's where we think it's going, and I'm excited to see where it goes.
Great. So, Jamal, looking forward, if we come back 3 years from now, what impact do you have, do you hope your work will have on financial inclusion and business growth? What will success look like to you?
Yep. Sorry.
Jamal, please. Sorry.
Go for it. No, please. Sorry.
Go, Jamal.
Oh, me? Okay. To be honest with you, if we come back here in 3 years and there are still people who deserve to have access to financial services and they don't, I will be pretty disappointed. And I think it's our mission to kind of make that an open and trustless network. So hopefully everyone has access to just basic financial services, be it stablecoins, be it blockchain transactions, whatever. I think that I would like to see more transaction types come out. So I think right now, I think there's a very small scope as to what people use blockchain for. A large portion of that is obviously trading. Some of that is dApps and DeFi and things like that. A small fraction, a growing fraction, is stablecoin payments. But I would like to see people use stablecoins for so many more things than they're being used today. I want to see more people pay their bills with stablecoins, pay their mortgages with stablecoins, pay their rent with stablecoins. People are paying their friends with stablecoins, which is great. But I want to see actual usefulness come with those stablecoins, and I think it comes from being able to use them in any sort of daily action, right? Whether you're traveling and you're booking a vacation, whether you're I don't know, sending money to your friends overseas, whatever it is.
Or you're in Bolivia making a payment at a
exactly.
duty-free store.
Yeah. Let's start with that one. There we go. So anyway, I want to see more democratic access to payments. I want to see a lot more utility for stablecoin payments, and I want to see quite a bit more adoption on the developer level. I think that there are developers that are building amazing things. I think some developer somewhere in the world is building the next financial super app that we will all use in this room, hopefully in 5 years. And I think that a large portion of that app will be blockchain based. So I want to see those utility based kind of moves kind of happen.
Great, John, please.
Yeah, we're quickly moving. If you go, I go around to a lot of financial in the United States and abroad, a lot of financial conferences, and they don't talk about databases. They don't talk about these tools that sit behind the scenes. They talk about use cases. And so I would encourage, what we always encourage at these conferences is let's start to transition, to your point, Jamal, let's start to transition away from, what chains, what underlying technologies we're using, because the people that are actually going to push the buttons, they don't really care about that, right? They're not, they're not Bitcoin maxis. At least the next 100 million, 500 million, 2 billion, 3 billion people, they really don't care. They got to drive to work tomorrow, and they just want to be able to push a button. And so I think focusing on use cases is, over the next 18 to 24 months, is going to be the primary focus of those developing in the space and those starting to make real inroads with your traditional financial endpoints, right? Your banks, your financial institutions. Because again, I come back to, that's where all the liquidity is. And if we're going to make that liquidity interoperable with these new systems, we've got to get to use cases, because that's where we see success. We see success in discussing use cases and not the underlying technologies.
That's great. So we have 3 more minutes. So let's wrap up just quickly, 30 seconds each of one of you, starting from Rachel. What do you think about what we discussed today? What is the final message for the people that is hearing here?
Yeah. Obviously, first, thank you for having me. This was really great. I think I'm really excited to see what the future holds for blockchain and stablecoins in general. And I'm really excited about what we're building at Lightspark. If anyone wants to come talk to me after this, please do. I'm happy to answer any questions. I'm more on the engineering side, so I can get really technical if anybody's interested. But yeah, thank you. This was really awesome.
Great. Jamal, please.
Yeah, likewise, thank you for having us. I love being in these just like environments. I just feel like there's really good energy. And with that, I think I want to kind of tell everyone to just keep building cool shit. Like, keep building the future of what we are doing. We are literally paving the way for the future of finance. And I think in 5-10 years, we will literally have built the building blocks that will change the world. So just keep building, keep doing cool shit, build on blockchains and do things with stablecoins and solve people's problems.
Yeah, I would just say, it sounds simple, but don't stop. I think we're at an inflection point and a turning point in stablecoin adoption, regulatory adoption within the U.S. and abroad. It's time to push your chips all in and accelerate. So just keep going.
Great. John, finally.
The key to success over the next 24 months, 36 months is going to be focused on interoperability. Those focusing on interoperability of different assets, different chains, different protocols, partnering, creating those interoperable mechanisms, I feel like are the ones who are going to have, this is why we see companies like Rain making such a huge progress in the space. I think focusing on interoperability, focusing on partnerships, there's never been a time before where it's been as easy to build. The example I use is if I'm an entrepreneur starting an e-commerce company tomorrow, and I try to go start it the traditional way, and I go get a bank account, and I get a processing account, and I do all that. It can take days, weeks, right, to get that all set up. By the time I get a bank account, by the time I do all that, or I can literally start taking stable coins in the next 5 minutes on a website that I built using AI. And so, thinking through how the paradigms have shifted over the last really 12 to 24 months, and focusing on interoperability and the ease of interoperability and partnerships, I think is what's going to really take a lot of these that are focused on these use cases very far.
That's great. thank you very much, Bitso, for putting together this amazing panel. And if you have any more questions, I invited you to take here at the side of the stage. The speakers will be available the next 10 minutes, so take advantage of this opportunity. And please, big applause for this amazing panel. Thank you, all of you.